So it's my real pleasure to introduce two folks here, Rukaiyah Adams and Brandon Ross, to talk about the capital landscape in Oregon and how that can help with the innovation economy in Oregon. This is really special for me. It's the first time I'm actually introducing Rukaiyah to anybody. She is my North Star, by the way, and I'll explain in a minute why. So just as introducing Rukaiyah, kind of where she is today, I mean, she doesn't really need much introduction. I'm pretty sure a lot of people here that are in town know about her or know of her. Since January of last year, Rukaiyah has been CEO of the 1803 Fund, which aims to grow shared prosperity by aligning financial investments with community-based organizations. The fund blends aspects of both traditional investment and philanthropy, described as investing for people. It got launched with $400 million from Phil Knight. I think please give a, I think she operates the largest fund led by any Black person in the country. I'm so proud of her. So previously, Rukaiyah served as CIO, Chief Investment Officer of the Meyer Memorial Trust, a local foundation leading investment activities and consistently delivering top quartile performance. I think in 2019, she was ranked number 2 CIO in the country of any endowment. So under her leadership, Meyer tripled the assets managed by diverse managers, increased assets managed by women tenfold, proving diversity is not a concessionary practice. She pioneered the socially responsible investing concepts, including the affirmative covenant and people, products, and shared prosperity frameworks. I'm a living example of that. Before Meyer, she managed a $6.5 billion capital markets fund at the Standard Insurance Company. From 2017 to 20, she chaired the Oregon Investment Council, managing approximately $100 billion in public pension and other state assets, achieving top performing status. So she knows how to make some effing money. Rukaiyah serves on the board of Albina Vision Trust, Self-Enhancement Inc. Foundation, Oregon Health Sciences University Foundation, Oregon Public Broadcasting, where she's currently the chair. She also serves on the Oregon Higher Educational Coordinating Commission and has engaged in pro bono legal work for several organizations. I think she just joined the Port of Portland Commission. So, you know, she's a busy lady. I first met Rukaiyah, and this is on a personal note, through my then 11-year-old daughter, Annika, at an Oregon primary event about 12 years ago, around this time. I think it was Eileen Brady's election, which she didn't make it. But we met for a brief moment. But Annika's instincts were right. You know, she came running to me saying, "Dad, I met this amazing lady. You have to meet her." And then she brought her down. 2 years later, we reconnected when she joined Meyer. And she literally grabbed my wrist and inspired me to start Elevate as a lead investor. Elevate exists because of her, not because I wanted to do that. And because I hate raising capital, I really do. And we are so eternally thankful for her impact, the impact that she's made, because that investment has led to so many investments in so many women. I'm so proud to say that Elevate Fund 2, 50% of those investments are in Black founders, and majority of them are in Black women. About 11 of those women, there's about 120 women that ever raised $1 million or more that are African American in tech. 11 of those are from Elevate. So talking to Rukaiyah is Brandon Ross. I wouldn't have met Brandon if it wasn't for Rukaiyah. He's a unicorn. He's an Oregon native, joined Elevate Capital in 2019 as a senior associate, and has since transitioned to investor relations. Prior to joining Elevate, he worked with the Makita Group, where he helped manage assets over $130 billion. He has been a great asset to Elevate as we continue to expand our reach and build out new funds. So on that note, I'll let you guys take over.
Thank you.
Hi, everybody. I'll try not to be dull. I'll try hard not to be dull and to tell you the truth.
Man, Comp was right. These seats are very comfortable. Goodness gracious. Before we get started, I just want to take a second. When I first started, like this photo was from my headshot with Makita, which was then Pension Consulting Alliance. And one of our clients was the Oregon Investment Council. And so then the guy who ran that company would bring me along, Alan Menken, to the OIC meetings. And there I saw Rukaiyah, helming $100 billion, right? And so one meeting in particular, I saw her, Robert F. Smith, who runs Vista Equity Partners, came to the meeting, he did his pitch, and watching two Black people exchange $750 million was insane for me. Right? So it's just very cool to be on the stage with Rukaiyah, talking about, the state of Oregon, capital, innovation, how we drive growth and get everything in alignment so we can all function and grow together.
I'm going to put you on the spot, Brendan.
Oh,
You and Nitin. So people think that investing is math, and there is a lot of quantitative analysis in it, but to me, it's still a people business, and I am the most recent in a long line of private asset investors in Oregon. Many of you know the story about how KKR started in Oregon with the Oregon Investment Council, and when I first started, there were investors on that board who had been doing it for 30 or 40 years who taught me what they were looking for in people. I learned the math, I learned the technical analysis in business school, but the hard part, the magic, is in the people. And that day when Nitin's daughter brought me down the stairs to meet him, my first thought was, who is this man raising this little girl who's so assertive that she sought me out in an adult party, right? This kid just walked up to me and started a conversation about life. And I thought, I wonder who her parents are. And so that was my first thought. And she was the reason why I took a hard look at Nitin. And just interacting with her really started, I watched Nitin for years before we had a conversation about investing, as I was being taught to look out for special things that lead to success in investing. So Nitin, your daughter got my attention, but I sort of low-key stalked you for a couple of years before we talked. And then around that same time, or maybe a few years later, I met Brandon, and I thought to myself, one of the powers I have sitting at the table allocating capital is cracking doors open, right? Is opening doors, and in some cases pushing people through them. And for Brandon, I really didn't even have to do that. We just looked at each other and we're like, okay, let's fucking go. Like, it's time to go. And so it's exciting. The roles are exciting. The money piles are big, but at $100 billion, you're not really managing money. You're managing energy. And the best investors understand that what you're doing is channeling energy to focus on people and ideas that matter. And if you focus on the right people and the right ideas, the investment performance is an outcome of a human interaction, not an outcome of a quantitative interaction, even in the case of quantitative investors. So I will say that the two of you caught my eye for different reasons. And now I have a style of investing. Right? And you were a part of proving my concept. So thank you very much. This room is evidence of your success and the money. You know how I feel about making the money. We'll talk about that later.
So really, as you have a seat here in Oregon as one of the biggest pools of capital in town. When you look at the broader Oregon economy, what is it that you see? What kind of truths are we avoiding right now?
Yeah, gosh, we planned for this, and I have to admit, Brendan, I forgot what we planned, so I'm just going to say what I think.
Hey, go for it.
Okay, so we have done remarkably well with our state operating budget and pools of capital that are here, right? We essentially we bootstrap our growth here. There's some capital that comes in from other places, but we haven't had the kind of capital infusion that a city like, Palo Alto has had, for example, or Boston. And so I would say one of the challenges for growth here, and there will be growth, whether we control it or not, will be the alignment of private capital from within the state, the attraction of private capital from outside the state, and then the alignment of those two with public capital so that we can really drive our economy like a piston. That's what's been missing. We have some local capital. We need more external private capital. And then when those two come together, we've got to get our public capital sources in line with, where private investors are going. And that's a part of why I'm interested in the Port Commission. There aren't that many big issuers or capital users in the public domain that are not issuing bonds for services or, consumptive goods. And the port is, along with Bonneville Power, one of the two big issuers in the region and capital allocators. And so I want to learn, how do we get our economy and our economic output in line with that big piston of collective spending so that we have economic growth here?
So, yes.
And I would also add, that we have these wonderful heritage industries in Intel, in semiconductors, and in athletic apparel with Nike. Those businesses have done well, but I really do think we have to think about the future and how we evolve our economy, not beyond those things, but together with protecting our incumbent advantages there. And I have some opinions about what we should do.
Yeah, Nike and Intel were wonderful companies that were started in the 1960s. And we need to figure out exactly what, the role of our innovation economy will play going forward. So what do you think some of our natural advantages are actually in driving our innovation and our growth and getting our capital aligned to support those?
Yeah, so I would say that we should start with our incumbent advantages here. Natural resources are a massive incumbent advantage. And I think water is something that we need to get smart on, not from a scientific perspective, which I think we have now, but from a data and technology perspective. We have to get better at thinking about water as an asset, or else the Californians and New Yorkers will monetize our water resources. So I think natural resources, renewable energy, for example, would be huge. There are some forms of transportation that I think we need to get better at. High-speed rail, we need to think through the issues of infrastructure investing here before we become a kind of sleepy community connecting Seattle and San Francisco. So I would start with natural resources. Right now, I'm really deep in reading about Lee Kuan Yew and what he thought of Singapore when he took over leadership. Oregon is not that different than Singapore in terms of population size. Geographically, it's bigger, but where the population centers are is not that different. And our love of green spaces is sort of similar to his. So I've been reading a lot about what he was thinking in the early days of Singapore, and reading a lot about Taiwan and how the semiconductor industry stepped up there, thinking deeply about what we can actually do in this economy over the next 30 years. And I think our aspirations should be more in line with Taiwan and Singapore and less in line with Boston and Philadelphia, to be honest. And our economy already looks east, that we are trading a lot eastward, but our thinking is geographically limited to our peer set in the United States. So the second thing I would do is to start thinking globally about where we can head. Now, Lee Kuan Yew was a benevolent dictator. There are some major problems. I understand that. So before anyone throws food at me, I understand there are differences between our form of government and what he could do. But I still think that we have the talent, the international sophistication, transportation, natural resources. We have some things here, some incumbent advantages that we need to be more ambitious about where we want to go in our economy than replicating other U.S. domestic cities or even North American cities, frankly.
These are really excellent points. And, VC historically or not historically, but I think recently here has really focused a lot on technology companies. AI, we talked about, was a really big driver. how do we marshal investment towards not just tech, not just SaaS, but natural resources,
Yeah, I think
water?
we have to have hooks to the incumbent advantages that we have. So whether or not those AI resources help us think about how we'll manage excess snow melt from the mountains that come through the Willamette River, and whether that water can be monetized, and it will be, whether we monetize it or not, helping us to plan for the impact of climate change here. So I would say the thinking would be the kinds of companies that help us take the technological advances and apply them to the assets that we have, a natural incumbency in. I think that's going to be the secret for our economy, not the pure tech play. It'll be really hard for us based on our educational attainment levels in middle school here, frankly, and the size of our population and the domestic capital, at least domestic for the state, to chase down the valley, right? Be hard to chase down even North Carolina at this point, or Boston. So to me, the strategy shouldn't be replicating those models that work there. The strategy should be, hey, what do we have here that none of them got, really? What do we have here that we can drive? We can be a mile ahead of them. And I do think that in natural resources, again, those are not consumptive resources. Water is a good example of things we might consume, but wind, solar, there may be even, I don't know, thermal opportunities here. And we might have some other forms of energy here that we haven't quite figured out how to monetize yet. So I just think we should be leaning into those, at least the applications of the technology on top of that, not just pure technological advancement.
Absolutely. And when I look at the capital providers, a lot of foundations, endowments, there's a lot of external management of those capital, those stacks of capital. How do we engage those OCIOs to really care? Who are based in San Francisco, New York, wherever, that there are natural advantages in Oregon. We should be spending and allocating our dollars here, just because they have their own missions, their own agendas, their own values that might not align with ours.
This is going to get me in trouble, Brandon. I see where you're taking me. But I will say that for the ones of you that are on boards of organizations that have capital pools here, it really isn't a good thing to assume that the best investors in the world are somewhere else. Because when we outsource asset management, we're insourcing values. One of the great things about me being here at, in the Meyer seat and the investment council seat is that I lived in this community, right? I could see bright people like Nitin who could start funds and really transform the environment. I mean, Diane Freeman's here is another example of an investment we made because I live here. And if we're outsourcing that investment decision making, then it's really hard for folks who live in other places to be vested in the investment funds, minds, talent here. It's really hard. So I really will push you to challenge that assumption if you sit on those boards. And then to the extent that we have OCIOs in other places, if you sit on those boards, I think having a local, not mandate, but recommendations is a really good idea. Or an expectation that those OCIOs spend time here or that they have talent here. In the case of some of the really large ones like Cambridge or, Jasper Ridge now is a pretty big partner here, that spending time here is really important. Again, because if we outsource our asset management, what you're really outsourcing is, the thinking about how capital grows, that then our own local economy gets ignored in that. Now, there are a lot of pools of capital here that are at a harvesting phase, right? So some of our early sources of wealth, people who made money in timber and, the early economic growth here, understandably, those G2, 3, 4, 5 families are harvesting. They're not growing. But in order for our economy to grow, we need new sources of wealth and people who are hustling to grow, not just harvest, in order for an expansion to happen. So I feel really strongly that if we outsource the function, then we need to have people spending time here, coveting what is here. Otherwise, the capital, the early stage capital in particular, will be risk averse. It will go to the funds and investors that everybody knows, the name brands that are massive and successful, but again, are not connected to our local economy.
And then going to the public side.
But here's
Yes.
here's the flip side of that. In order for CIOs to get this local investing through their investment committees, the investors have to deliver, right? There's a lot of community building here. There's a lot of growth on paper. But if the investment doesn't come back financially, then all the talk just doesn't work. And that's an area where I think we have been challenged in Portland or in Oregon, in that there's a lot of really important community building work that leads to investable assets, but we haven't, it's been hard to have the conversation about what is investable for institutional investors like me. I'm a nice lady, but I'm a shark, right? At some point, at Meyer, we had cash needs. I couldn't just put money out into the street and have it grow on paper, because at some point we needed it back to pay salaries and to make grants and to operate our business. And so we couldn't just invest because it felt good or because it was growing on paper. We needed the capital to return to us. And that kind of discipline, as harsh as it can be, is really important for growth, because if we don't have the return of capital, then it's hard for CIOs and investment committees to continue to invest in the region. And that makes you an unpopular investor, right? Because at some point, we have to deliver cash to our businesses. And the other thing is, a lot of people don't know the CIOs are ranked against each other. You know exactly where you sit. And the ranking isn't just paper ranking. It's, do you deliver the cash that your business needs? And we are all incented to do well in that ranking. And that year that I was number 2, I was so mad. I was like, who's number 1? Because my numbers are really good. That was a lucky year. And the person who was number 1 that year, it was a year that equities ran, and this fund just sold off all their private assets and put all their money in a S&P 500 index, and they just demolished everybody, including me.
All beta, man.
Yeah. So we are aware, we're aware of whether or not our investments are returning capital.
And the public sector can be a little bit more forgiving when it comes to returns. However, we actually have wonderful pools of capital. Prosper's here, Oregon Inc.
Wait. Let's parse that out.
Okay.
The OIC was not forgiving, right? So that
Right.
public pool. Okay, so that is a publicly managed pool. It's technically for the individual beneficiaries, but for the municipalities that have pools of capital that have a dual purpose of economic development and growth, they're more flexible than the pools of capital that have a fiduciary responsibility to individual beneficiaries, for example.
Yeah, I remember being on the pension side of things, and as Colin was talking about, entrepreneurs were very optimistic. Consultants and CIOs were like, I'm waiting for the other shoe to fall, and for the the bottom to fall out. And that was the main difference between me for working at a pension plan versus working at a VC. It's a different perspective, because you think about, well, what is possible, and what if this does work, versus something is going to go wrong and I need to figure out how I'm going to pay my beneficiaries. But what rooms are you seeing?
Is that how we seemed, Brandon? It did?
Absolutely.
Okay.
Because one second, because at PCA, we established a new asset class called the crisis risk offset. And so we were just waiting for, equities to plunge. And so, it took a while, but when it did, it worked. But that was kind of the mindset of how we got to make sure that we can pay our beneficiaries. And if we, fall 7, 10%, 15%, what do we do?
Yeah, but in that case, you have a cash obligation. You have to pay out the pensions. That's true. But I would say that the way that I'm sorry that we stressed you out like that, Brandon. I didn't mean to.
Absolutely.
The way I try to think about it is that the investment outcomes are like a trampoline, where when you want to go low, there are times when things will go down, when you land on the trampoline and you'll dip a bit, but you want a resilient enough portfolio to push you up higher than you drop down when you hit the net. So I'm sorry that we stressed you out there, Brandon, but because you want to, want to be responsible to people, their retirements are really important. You want to be able to meet the cash needs that they have. And that way you really need your investors to deliver or to take the specific risk that you've, allocated to them, because you got retired teachers who are depending on you, right? Or working people who are paying for their children's educations with loans from their pension plans. So you feel a lot of responsibility.
Oh, 100%. But we talked about alignment between private capital, public capital, human capital. Where are you seeing the opportunities to drive that conversation and really make it not just a conversation we're having, but an actionable idea?
Yeah, I think there are 3 areas at least in the Tri-County Portland area, where there's an opportunity for alignment for our collective benefit. The first is in housing. I feel like our thinking about housing production here has been really cloistered, and that we issue bonds. The public says, yes, we need more housing. We issue $500 million of bonds, and then we try to solve a macroeconomic problem with a relatively small, short duration solution. And I think we could probably align better with public markets in issuing larger sets of bonds in order to produce more housing over a longer period of time, so that we have a 20 or 40-year plan for housing rather than a $500 million bond issuance. So I think that's one area that we could do much better at. And in that body of work, we could use AI. We could have some modeling for what demography will do here as the climate change happens. So I think there's a lot of technological overlay that we could put on that. So housing is one area that I think the piston needs to get in alignment: private capital, public capital, human capital, and we need to drive the economy forward. Housing is one. 2 is our waterways. That we have a Superfund site in the Willamette River is bonkers. And to me, the federal allocation of money to clean up polluted waterways is an economic development opportunity for us. We could bring billions of dollars of federal allocations into our economy in addressing the Superfund site. There are a number of private legal reasons why we've been slow to do that. It's totally unacceptable to our economy for us to continue to be out of alignment with that. The third area where I think we could get to alignment and to our collective benefit is in transportation. There's no reason why we don't have a Cascadia high-speed rail system between British Columbia and Portland. It will take a lot of work. We'll have a bunch of land use issues. We got a bunch of transportation issues. We'll have a bunch of issues there. But that could be $1 trillion jolt to our collective economy. And to me, the alignment of the relatively small amount of public capital that we need for planning, the private capital that will need to come in to help with some of the planning and, the land use ordering. And then, depending on who the president is, massive allocation to interstate transportation. That piston is big, and we need it. And we need it in Oregon more than the state of Washington does, and more than the state of California does, because we don't have large federal military bases to undergird our economy here. At Washington State, people keep wondering, why does I-5 continually get improved in Washington State? Well, they got some really important military assets there that we might need to move around if something goes wrong, right? And the state of California has all these research institutions that the federal spending undergirds their economy. We don't have that. And so that means when we have leaders who say the New Deal is coming, then we have to get into formation in order for our venture, industry to be funded by a combination of private and public capital. So I just feel like Oregon is teetering on a massive opportunity if this New Deal conception of spending more of U.S. spending domestically happens. We have to get into formation.
Thank you, Rukaiyah. Wait. I want to open up to see if anybody has 1 or 2 questions.
Did we talk about the things you expected?
I think we hit most of it.
Okay.
Because the main thing was, what do we do now? And you just kind of hit that.
Okay.
We have 2 minutes, so a couple questions.
Diane. Hi. So I think it's a great
Thank you, Diane, one of my favorite smart people who tells me to stop talking and get to walking. So last year, we managed to convince the Federal Department of Transportation to commit $500 million to a freeway cap in Lower Albina. And
Woo!
figuring that out, yeah, now we all get to sit down at family dinner, right, from that. And figuring that out, what we learned is what kind of alignment we need to get to. So in doing that work, I realized that I sort of understood how we get there. So I've been an evangelist for high-speed rail, and I'm making the case that we join the Western Cascadia region for that. So I'm just tapping that anytime, any chance I get. On the housing side, one of the challenges with bringing more public issued capital, so capital markets money into Oregon, is that we don't have a state bank. We don't really have a vessel for billions of dollars of investment here. So at 1803, we're thinking about how we could become that for the region, and just be a larger pipe in for private capital, at least from a bond perspective for the region. On water, I'm not quite sure what to do, and I think that's the bigger opportunity I'm learning right now. And again, reading a lot about Singapore and their freshwater challenges and the way that the economic growth there coincided, the technological, financial markets, and natural resource growth there happened. So I'm in a learning mode about water, but I just have a sense that for Oregon, that will probably be the single biggest investable venture opportunity of a generation. So if you have anything for me to read, Diane, I'd appreciate it.
Hey, Marcelino.
Yes. Okay, let's go. Oh, I just saw your speech. Hey, what's up? Is there one more?
Katon, I thought, yes.
Ooh, that's a hard one. Gosh, that's a whole other conference. But I would say where I feel like so at Meyer, we started investing mostly in climate tech because our program officers pressured me. Usually the CIO is kind of in a turret away from the program officers and nobody ever bothers you. But at Meyer, I had an open door and people would come in and yell at me for owning oil and like really push me to think differently. But what I think we could do here in Oregon, there's a bunch we could do with our lifestyles and personal choices and policy, all those things we know about in the nation. But again, I think it's the connection of technology to the climate change challenge. Like, what happens when we staple on our expertise for semiconductors with water management and modeling? Like when we connect the scientists at Oregon State who are designing fruit trees that will withstand climate change, how do we connect them to the technologists? So I actually think it's the catalytic relationships and connections that will lead to some intermediation between technology and natural resources. That's where the action is. I don't see the proximity of the scientists and the technologists in other places. So if I were to think about how a state of 4.5 million people could have a global impact in the way that Singapore or Taiwan has, it will be in the catalytic effect of STEM experts facing a challenge through technology. I think that is where we should play. So that's my best answer. I don't think there's much we can do as 4.5 million people that will change the world, but the technological innovations that will come from our expertise is what might change the world.
Awesome. I know Ali's coming up to kick us off, but thank you so much.
Thank you.